Hi guys, welcome back, and this is our webinar, and this is CLIQ company. So today our topic is technical instruments and indicators. My name is Olga. Nice to see you, nice to meet the new ones. Thank you for your comments, thank you for your likes, we appreciate it a lot. And I would like to remind you that if you have some questions or comments during our webinar, please feel free to ask us, and we'll do our best to answer your questions. So stay with us, and today we are going to give you lots of useful information about technical instruments, the tools that actually help us traders to have our tradings more successful, more easier, and to predict the future price movement. So here we go. By the way, what are they? These technical tools, which are called indicators and oscillators. When and how did they appear? Why do we need them? And actually, what we can see in our MetaTrader terminal right now, in the list of indicators and instruments, as lines, set of histograms, graphs. Actually, these are mathematical formulas. Look at the slide, please. This is the real example of one of the indicator. So it's like mathematics and the theory of probability put together, calculated, measured, have been tested for a long period of time for us traders to see them now in more appropriate way. So the lines, bright and picturesque, and histograms and graphs, everything to make our process of trading easier and more successful. You can see, you can use these instruments as we live in the 21st century, by the way, on your mobile phones. But you need to know that it's very convenient because you can always take your trade with you, put it in your pocket and monitor at any time, suitable time. For example, for during the break while you're drinking coffee and whatever. But you need to know that indicators have a little bit restricted properties, set of properties on your mobile. Also, you can use them in your tablets, phone-top computers, a little bit better manifestation, but still the properties are restricted. And of course, the best way to use our indicators is on your personal computers, on your PCs. Because here you can see the full bunch and the full set and package of all the properties of indicators, all the parameters, settings. We're going to discuss them to your liking and for your settings. Sorry. But a little bit of history. Actually, how did they begin? I mean, the process of initiating all these instruments into trading terminal. Actually, the history dates back to 50s, 60s, and there was very popular trading of stock exchange these years, and there were no technical instruments at all. Actually, the whole process of trading was on the phone. It was very hard because a lot of the time of your actually seeing the signal or your readiness to trade and the execution of your trade actually took a long time. It was a chain when you call the phone, you give orders, somebody is executing your trade, so blah, 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 blah. But still, people, even at that hard times for us, living in the 21st centuries, they still have actually traded and made their money. So no indicators, no prediction of the price movement, and actually the whole process of trading was after the news release. Only after that. So it was a little bit late for more successful trading. And actually the leap of evolution, the leap of technical progress happened in the 80s when there was very high demand of softwares because of the appearance of computers. And mathematicians, these people who actually created the indicators and oscillators, didn't stay apart from that process. Actually, they took part in it, and very great parts. How it happened? The perspective of earning big money using this Forex trading or stock exchange trading. Actually, this thought push them into building different methodologies and formulas for predicting the price movement. So this is how it happened. They started to build softwares and programs that actually can make the process of trading easier for us by predicting the future price movement, by showing where the price might move in the following time. And the peak of this evolution of appearance of technical instruments happened in 2005 with the release of MetaTrader. Now we are using MetaTrader 4, and you can guess there was MetaTrader 3, 2, and even 1. So it was the release of MetaTrader 1 with the whole set of instruments which are divided into two categories like indicators and oscillators, as we can see now. And actually MetaQuartz, from my point of view, did a very good job for us traders. Okay, all the traders actually can be divided according to their usage of instruments into three categories. One, it's like traders who use indicators. So they look at the chart, they analyze the market with the help of indicators. Second category, the traders who look at the charts, they use technical analysis and they actually analyze the market regarding so-called price action. This stream becomes more and more popular nowadays, and actually as we stay, we, CLIQ company, stay upgraded and updated with our educational courses. We also dedicate the whole lesson, the whole bunch of lessons for this type of analysis. But I guess we have them on our practicals. And the third category of traders, actually it's also a big category, and in my humble opinion, the most successful. They combine two ways of analyzing the market. So they use indicators, they look at the market, they analyze the price action. Why they're so popular or the most successful? Because actually their signals are more precise, because they use different types of analysis and more confirmed, more effective. That's why their trading is more successful. Okay, literally we have like hundreds of indicators in our indicator list. I was explaining how to find them on our terminal during our previous webinar, but I will show you in short today. And a lot of traders, of course, are using them. We have the settings of so-called classical instruments and indicators in our trading platform, in our terminal. And there are a few or some of them that are most popular. Why? Because of widespread, effective, easy to use. So we are going to present to you 4 of them on our webinar. I think the easiest, the most effective, and giving the more confirmed signals. Because actually our aim is the same, to use indicator to predict the price movement and to open successful position. But please don't get me wrong, I don't give you like everybody is looking for growl secret. There is no such things in Forex and stock exchange. Actually, everything has its shortcomings, weak points, strong points, and sometimes traders need to combine a few indicators to make it more successful, to make their work more precise. And of course, I will show you how do we do that, how do we combine these indicators. Okay. As you remember from our previous webinars, I will change from slides to terminal. I'm sorry for some hesitations because I need time to adjust it. Okay, as you have already known, all the indicators can be found in indicator list. So let's start from moving average. By the way, we need them. we need this instrument in our later analysis. And all indicators have the window of properties, window settings, parameters, levels, visualization, and actually some indicators have parameters, some have levels, the others don't. Actually, to adjust all these settings, it depends on the trader. If he needs, or she, if he needs some additional levels, even in the classical way, he can insert them, we can add them. And by the way, if you don't have some indicator from this list of indicators, for example, big, extensive, a lot of subdivisions, but still, if you didn't find your favorite indicator there, here, you can, no problem, you can always download it to your computer and actually add it to your trading instruments and make your progress of trading more successful. And just to adjust these settings depends on first time frame or trading strategy that you're using, or your targets, or even the time that you decide to dedicate to your trading. And if you don't know some parameters or settings for a certain indicator or instrument, for example, you don't know which parameters to put and insert here, don't worry, because there is also a chance to use classical ones. So just click reset, you will see that. And then MetaTrader provides you with the classical variant of settings. You can always use them. They have been tested and proved to be working with great effectiveness. So don't worry about that. Okay. Now, actually, I'm going to explain to you the structure of modification of each instrument. So, you go to the window of settings, you use parameters. For example, we can put classical, or what we need 18, for example. You change color. You can use the type of display. You can use different levels. Moving average doesn't need it. Visualization. It's a very important icon. For example, you want to sort out the time frames that you don't need or need. So you delete all time frames. For example, you need moving average only on H1, H4. You click OK. We have two of them. You delete one. So we have it on H1, H4. And if I click on 30, here it is. It doesn't exist here because I set my I organize my setting only on these two time frames. So we have our moving, and let's talk about it. So let's go to practice. So first indicator that I'm going to talk about is moving average. It's a unique indicator. I like it a lot, and a lot of traders are using them, moving averages, because actually the unique quality of this instrument is it can be used as a single indicator, and also it can be used as a part of different trading strategies, and even the part of other indicators, which I will show you and prove to you that this it really is. So that's why it's like has a lot of functions. A little bit of history. So moving average. Who actually created moving average? Actually, it's, I don't know, because actually the history keeps silence about it, because it's like always existed. Even in earliest 50s that I was talking about, I was telling you the story of appearance of indicators, it also existed. I know for sure because there are some mentions of the traders who were trading these days stock exchange. They were using moving average. It was the only indicator that existed that time. It has some shortcomings. It's a little bit late because it's analyzing a lot of data, but still it's like indicator number one and it's still working. Novice traders like this indicator a lot. Why? Because it's simple. Okay, so moving average, it's actually a trend indicator. It's very important because all the indicators can be divided, I mentioned it, I will repeat, into two big categories. The trend indicators and oscillators. which can be used in intra-trend trading. Just give me a second, please. So, moving average is a trend indicator. We used it to analyze the trend moving, and it looked like single flowing line. And this line represents the average price over a period of time. For example, period 18 that I set here is like average price for 18 candles. Every trader finds the most convenient and effective moving average for him or her and their tradings. And regarding periods, actually, from my conversation with professional traders and from my experience, it's believed that, for example, moving averages 50, 100, and 200 are used for with investors, long-term traders on longer-term time frames. And moving averages from 5 to 20 are used by short-term traders, scalpers, and of course they're set, they're plotted on time frames from H1, for example, to M15, or sometimes even less. How to read information from moving average? Okay, for example, I will set, just to make comparison, moving average with the period of 50. Okay, we will change color, make it red, make it thicker. Okay, you see these lines absolutely different because they have different periods actually. How first? What we need to do? How to read information? First, we need to identify the trend. So it's regarded that if MA, moving average for shorts is MA. So may call it MA sometimes. If MA points up, it means it's an upward trend. If it points down, like here, it means that it's a downward trend. Also, there is another way, like I will give you some variations as the first way of analyzing the trend. The second is, if the price is above moving average, for example, we are taking into account our 50 moving average, it's upward trend. If it's below, it's downward trend. If you're using time frames, for example, H4, you will see absolutely different picture, you see. So it depends to you which time frame you are trading. It depends on your trading strategy, of course, and on your targets. So we have to choose anyway. But here we also see that it's upward trend. By the way, we are on Great Britain pound US dollar. Okay, let's come back to H1. Okay, second thing which we need to do is to find the entry point, of course. So how we can find entry point? There are also some variations. First is crisscrossing of moving average of smaller period with bigger period. For example, if MA 18 crosses MA 50, as in our example, upward, in upward direction, it's an upward trend. So here we need to open actually our trade, buy trade. The second way, if it crosses downwards, of course it's downward trend. So here you see it's a little bit late. Okay. The second variant with the help of price itself. When the price breaks through moving average, for example 50, it's red one, in upward direction and goes up, we open our buy trade. You see the signal is a bit earlier, so then the crisscrossing. If it crosses down, correspondingly we open our sell trade. Anyway, in this period of time, if we knowing this information stayed in the market, we have been able to make a lot of money actually. Let's consider it's like a lot of pips. It's more than 800 US dollars. Okay, so now you know how to read information from moving average. So first, I will repeat, you need to identify the trend, then you need to find the entry point. Next, MACD. So we are going to talk about MACD. The full name of MACD indicator is like also moving average. You remember I told you that moving average is actually a unique instrument because it takes part in even combining with another instrument. So MACD is a proof. So it's moving average, convergence, divergence. This is actually also very, very interesting indicator because it's both trend indicator and momentum indicator. So a little bit of oscillating purposes, a little bit of history about MACD. There is a creator and he's known. His name is Gerald Tappert, and he was a New York trader and he created this indicator in 1979. It took him a lot of years to create it, and at the beginning, all the indicators were used for trading stock exchange, and then later, if they proved to be working great, so the best of the best, they were transformed and used by Forex traders also. So now we use MACD for Forex trading also, for analyzing Forex trading and the price movement. Let's look. Okay, so we don't need movings. We go to our window, we find MACD. Actually, you can find MACD in oscillators here. And we also have some parameters. Okay, so MACD, it's an oscillating indicator. So it's both trend and impulse. And it consists of two parts actually, a histogram and a moving average. Histogram consists of fast EMA and slow EMA. Actually, it's all complicated as mathematics, but nevertheless, okay, we'll have histogram and signal line. Histogram sometimes is called slow line, but it consists of fast EMA and slow EMA. And signal line, so it's MA, MACD, SMA. Colors. I like colors. I don't need any levels here, visualization. Let's leave it classical. So this is how it looks. Histogram and it's a slow line and signal line in the form of a moving average. Okay, so first, how we identify the trend, because it's also trending indicator. It's easy. This is an indicator actually fluctuating between above and below zero. So if the indicator is above zero, it's considered to be an upward trend for sustained period of time. This is important because it can be, for a short period of time. It doesn't tell you that it's an upward or downward trend for sustained period of time. And if it is downward, below zero, for the sustained period of time, is downward trend. So we can see good example of sustained appearance below and above zero. Next, how we can find entry points with the help of this indicator. Actually, the basic strategy of looking and finding entry points of MACD is actually to look where the lines of indicators are, above or below zero. If the lines of indicators are above zero, it's the time to open entry points for buy. If it's above zero, buy. If it's below zero, entry points for sell. Here it's unsuccessful. It's a kind of flat situation in the markets. Also, there are additional entry points with the crossovers of signal line and the slow line, which is histogram. When signal line crosses below the slow line, the histogram, it's time to open, for example, sell trade. When it crosses above, it's time to open buy trade. You see, maybe the second signal is more confirmed. So you need to use, now I give you variations, but you need to test it for yourself. You need to use them to probate it and to choose the best one for you. Okay, this is what concerns MACD. As a resume, we can say that advantages of MACD Actually, it's the manner of manifestation, the price of its performance and work is smoothing. So it sorts out a lot of false signals. That's why the signals from MACD are more precise. That's why a lot of people are using, a lot of traders are using this indicator. Okay, let's move to another one. This is alligator indicator. Okay, it's called very funny, and the creator of this indicator was Bill Williams. A little bit of history at the beginning. Actually, I can't tell you exactly when, maybe in late 50s. Oh no, it's stochastic. Okay, so Bill Williams is a former teacher, actually, and when he started trading, he was using accounting methods in his charts because one of his friends was accountant. So he came to the idea that traditional business can work also in stock exchange trading. So he started to, make different variations of trading, of analyzing the price, of making some methodologies for predicting price. And actually, by becoming a trader, it was not very successful for him. Actually, he lost a lot of money at the beginning, and he came to the idea that it's high time to stop using somebody else's signals and to start to make his own indicators, giving his own signals, and which will be more precise and more reliable. So it took him almost 7 years, him and his team, to create alligator. Actually, if you look at the division of Bill Williams, you will find a lot of indicators made by this very talented trader. And one of them, alligator, I'm going to present to you right now. It's a trend indicator. Let's set it. Bill Williams, what I was talking about, and a lot of indicators made by him. So we're going to use alligator here. So we have actually the set of 3 moving averages. Say hello to moving average again. And with this lowest line, jaw line, I will make it thick. Teeth line, thinner. And the fastest line, it's lips of the alligator, how it looks like. Okay, so actually the main advantage of indicators, they're very visual. So you can actually look at them and analyze the price movement easily. And what about periods? Actually, we use mostly our classical way. So only colors, parameters, use it in our classical way. So it's a trend indicator, and it shows how to analyze it, how to read it. It shows the trend. For example, if all the lines of this indicator, jaws, teeth, and lips, are pointing down, it's a signal of a downward trend. You see, it's explicitly over here. If they're pointing up, it's actually a signal of the upward trend and downward trend. Also, we can identify the trend with the help of the price as any moving average. If the price is above the jaw line, the slowest one, it's the upward trend. If it's below, it's a downward trend. So 2 ways of analyzing the trend. Next, how to find the entry points. So you need to wait until the price will break through jaw line. It would be the easiest signal for upward trend and for entry point for buy. We can enter here, we can make lots of money. Or here, this is breakthrough, this is outbreak, so we take this opportunity to open sell position, and we have more than 1,000 US dollars, for example. Next way, with the crossovers of the lines of alligator. When the lips line crosses, there are some variations. I will give you both. So first variation it needs to cross jawline. It's very important on the jawline. Some variations, it needs to cross two lines together. So here we see that actually the lips line crossed the both of these lines. So this is an entry point. And I will tell you, if you have two variants, for example, for identifying entry points or identifying the trend, and both took place, it means that your signal is confirmed, double. So it's more precise, not take it. Okay, when the lip line crossed teeth line and jaws line, here we can take our sell trade a little bit. Yes, like moving average, we have lost this very big movement, and we enter the market only here, but nevertheless we have lots of chances to earn money. Okay, this is how it works. And regarding the terminology, as the creator is Bill Williams, he denotes some periods of alligator and gives it names. For example, when we have our lines of alligator stretched apart and pointing up, he calls this period in the market that alligator is awakening. I'm sorry, yes. And when they're pointing down, it's like alligator is sleeping. Maybe he was a bullish trader. And when the lines of alligator are shifted into horizontal way and converge to each other, this is the period when all the traders should stay away from the market, because actually it's the time when the trend is over, might come into an end. Look, here was a downward trend, and here this is situation. They're shifting in the horizontal position, they converge to each other. But still we see that alligator is going to point down, so maybe it will be a continuation of the trend. But still, this successive period of time, you should stay away from the market, and this is the time of position closing and profit taking. And this period he calls like alligator is sated. And here alligator is eating with mouth open. So when we see this big space between the lines, alligator is eating with mouth open. Alligator is sated. And the period of intervening crossovers of the lines repeated. Here's only one time. I will show you. Here, for example, this is the period of uncertainty on the market, and also this is the period when alligator is sleeping. There is no trend. Actually, we can't find any entry points here because the signals are very unclear. So, as a resume for alligator, it's a perfect indicator for defining the trend, for defining entry point and timing of entering the market, but it's actually its usefulness is restricted in so-called flat situation of the market, period of uncertainty, or when there is no prevailing price movement. So this is about alligator. And now let's talk about stochastic. A little bit of history. It was also created by George Lanane in late 50s, and took him almost 10 years to create this indicator. There were a lot of work done. There are a lot of testing, and he's actually the owner of the corporation Investment Educators. So a very smart man, a very successful trader. And how did it appear actually? All the formulas and calculations were made manually. I told you there were no indicators in these years, so it was manually. And some formulas were taken from traditional business. One of his friends suggested him to use formula for his, I can't remember exactly which traditional business it was, but far away from Forex, from stock exchange and trading at all. He did it and succeeded in it. So what we can see now is stochastic indicator. Let's look at it. You can find it in oscillators. we have some also parameters. So, from all the bunch of lines of different periods, line K and line D were successful. And not to line K, line D, for me it's hard. I need always to remember what is K, what is D. So one line is called main line, and the second line is called signal line. So main line is more important for us. Main line will be dark, and signal will be red. Talking about levels. So we have classical variation of levels. 20 in data will tell you what do they mean. But actually some traders can add, you see add, this is actually a possibility to add some levels for their trading, for their liking. Okay, let's look at it. So we have main line, we have signal line, and talking about this indicator, we need to say that this is oscillating indicator. So it belongs to the category of oscillators. So we can't define the trend with the help of this indicator. We can only find the entry points, or stop loss, or take profits. Okay, it's actually band between 100 and 0. It's fluctuating between these two levels. And also we have additional levels 80 and 20, which denote from 80 to 100 is the zone of so-called overbought condition of the market, and from 20 to 0 is the threshold for oversold conditions of the market. So when you look at this indicator and understand that this period of time market is overbought and this period of time market is oversold, how do we find an entry point? So we understand that. To start from, for example, buying, it's better from low prices. The price is rising, our profit is rising. So we look at oversold zone and find the crossing of of level 20. When we see it, we open our trade for buy. Also, the second variant, when the signal line crosses the main line in upward direction, it's also a signal for entering the market for buy. Here we see the signal is a little bit later, but for us it's good. Okay, the same situation with the sell trades. So we look at the market, we see when the market, when the value of indicator crosses level 80 and goes down. This is the time to open sell trades. And also we can wait until the signal line cross the main line in downward position, almost at the same, and a little bit later, like 2 candles later, it's 1 hour chart time frame. So we enter the market over here. So you see, different variations give you a little slightly different signals. Some of them comes earlier and maybe with higher risk but bigger profit, and some of them a little bit later, but the risk is less. So this is how we identify, we find our entry points and how we use this indicator. About advantages, maybe we can say that actually, as the stochastic belongs to category of oscillators, it gives us opportunity and big chance to trade not just with the beginning of the trend, but within a trend. So it gives actually a lot of entry points for us. Within one trend, we can enter the market for a few times. Okay. Now, actually, let's resume what I have taught you. So, why do we need these indicators? So, with the help of indicators, we can identify very important parameters for our trading. We can identify trend, we can find entry point, and what else? Actually, we can set, because of visual, because indicators are very visual, we can actually, from just a glance, to understand where it's supposed to be our stop loss and where we can exit the market. So we are going to talk about stop loss and actually about take profit. And the best way to do it is by combining 2 or 3 tools together, because as I told you, they have weak points, strong points, so we're going to use them to our advantage. Okay, let's combine maybe alligator and stochastic. We have stochastic here. Let's use alligator here. Okay, so we identified the trend. We found the entry points. I gave you lots of variance, you just use it. How we identify where the stop loss is supposed to be? We look, for example, we start buy trade here. We look at the zone of oversold condition of the market, the last one, on stochastic. It was here. It's not as explicit as here, but still it's a zone. Okay, we identify the corresponding zone here, so it's over here. And here we can put our stop loss. Actually, we could set our stop loss. A little pips lower would be just for sure. It will be better for you. So over here it will be our stop loss. As you can see, no stop loss tradings, so we have our trade successful. Also for sell. This is for buy, for sell. So we identified the entry point somewhere here. So we need to look at the previous overbought zone. Here actually it's not explicit because there was no touch of the level 80. The threshold starts from 80 to 100. So we have to look at here, and here we have this zone of overbought. So little pips higher would be our stop loss. And it's good because you see there are lots of shadows that actually show the market was uncertain, was strong movements here. So over here would be our stop loss. As you can see, our trade was successful this way too. Okay, take profit. Looking at stochastic, we can say that if you entered market for sell and we were selling from high prices, when two lines of stochastic indicator reach the opposite zone, for example, it's oversold zone, we're supposed to close our trade. So when the market moves, we wait until it goes here. Here we're supposed to close our trade. A little bit earlier for you, no problem. Stay in the market as long as you can. Maybe you will wait until the second oversold zone, but it's not explicit here. You're supposed to exit the market earlier regarding the indicator. Okay, this is how we do it. And next set of instruments that we are going to combine, this would be MACD. Let's set it. And moving, for example. Any moving. We have 50. Okay, no problem. We have 50. So, with the help of moving, or with the help of MACD, they're both trends, we can identify the trend. Let's take moving, it's more explicit for me. So, we opened buy trade. We entered somewhere here. If we have second moving, we took the signal from the crossovers of moving of shorter time frames with the longer time frames. And for example, we entered market here, where we're supposed to set our stop loss. Just look at the MACD. So we find the zone below zero. This is the last zone below zero. We find the corresponding zone in the market, find the lowest price, it's big over here, and set our stop loss here. As you can see, no stop losses, successful trade. Next, you can exit the market also when, for example, signal line crosses the slow line in opposite direction. So when it's going down, for example, you entered market here, when you see that signal line crosses actually the slowest line in the opposite direction downward, it goes downward, it's the time for us of the position closing and profit taking. And actually, if you remember what I said before, this is the signal for opening the position for sell. Very, very early signal, but still risky, but still it gave us money. Yes, a lot. So let's consider this is what buy, sell. The same. We identify the trend the price is below, we identify the entry point, and we can see that the last bought zone when the MACD was above the zero is here. Find the corresponding zone, find the highest peak, set stop loss here or a few pips higher as you wish, and this is our stop loss. You see, no stop loss is here, our trading is successful. And also you can exit the market when the signal line crosses the slow line in opposite direction. So here this was a crossing, so you're supposed to leave the market. Still we have a lot of profit, and actually it's not a good signal because you need to understand that this downward trend, it's very risky to open buy, no matter if you saw the signal with the help of oscillator. So you need to wait until the trend is upward because you're going to buy. But there are some traders who open contra trend positions. They have risk, but still the higher risk, the higher rewards. Okay, so as a resume, all the classical indicators, I will be talking and changing some settings. All the classical indicators you can find in your trading platform actually didn't appear there in vain, actually, because of the reason. And the reason is very simple, because they proved to be working. And they had been working for a long period of time. They've been tested by lots of traders, and they're still working now. So there is a tendency when people, they consider that something new is better, because something old is already old. But in this case, in my humble opinion, I think that if classical variant is working, let it work. If it brings you fortune or profit, talking about trading, let it bring it. Okay, and now we are going to receive what we call a practical approach. So I'm going to present to you a ready-made trading strategy, which you can use with the certain settings on any time frame. On any currency pair. As an example, it would be Great Britain pound and US dollar. So there are some conditions that you must remember right now. First of all, there must be two types of moving averages. And sorry, I forgot to tell you, and I'm going to tell you right now. So talking about types of moving averages, there are different types. Actually, they can be simple, exponential, smooth, and so on. From all these types of moving averages, simple and exponential are most important. Lots of traders nowadays prefer to use exponential. Why? It's smooth moving and it gives better signals. So in this trading strategy, we are going to use exponential moving averages. And for short, it will be, I will delete it and set again. You see, there is slight difference between the simple and exponential. From the first time, actually from the first glance, it's not explicit, but still there is difference. So we have 8 exponential, and we have different period of moving average. It's 18. So please take it into account. We have 2 moving averages of different periods. One is 8, one is 18. We need, for this trading strategy, 2 time frames, H1 and H4. We're going to trade on this on these time frames. First, how we find entry points for sell? When the price breaks through EMA is short for exponential moving average. EMA 8, it's thinner line, it's blue, and goes down at least 50 pips. Let's check it. It's more than 50 pips. Next time, when it touches EMA, we open sell position. Here is the touchdown, so we open sell. Good. Buy. When the price breaks through EMA 8 in upward direction and moves at least 50 points, Next time it touches EMA 8, open buy position. Very good trade. Stop loss on time frame H1 is set 25 pips. Time frame H4, stop loss is set for 50 pips. Sorry, there was a little mistake. Stop loss is for H1 is 35 pips and for H1 70 pips. Take profit for H1 is 25 pips and for H4 50. This is it. Why do we need second moving average? For additional entry points. For example, let me check. Okay, when the price, the condition is the same, broke through EMA 8 and moved in the downward position direction at least 80 points. Next time it touches EMA 8, we open sell position. But if the market goes up or continues to go up and have a touch with the EMA 18, we can open actually additional position for sell. As you can see here, open position sell here. We have made our profit. Actually, it was successful trade, and also we have made another trade also successful. The same way it works for the buy trade. The price broke through EMA 8, gave us at least 50 points. Next time it touched 60 already, it touched EMA 8, we open buy, but also this is stop loss. You see, the market gave a lot of movements, but still, and this is stop loss, 34, but no, we can still survive in this trade. And next time it touches EMA 18, we could open another position for buy. Actually, this position would be more successful. So this is how it all works in the trading, in the real market trading. Now you can see here, actually there is a breakthrough. Yes, very good. Look at the actually what's happening with the price right now in the market. Let's check if we can use this trading strategy for making money. What we see the breakthrough, we see the outbreak, we see more than 50 points, so the condition is set. We see the touch of the market, so we can open our position to sell here, and still we have touch with the EMA 18, so we open position over here. So we have two trades and they might bring us money. Actually, yes, a little bit. We need 6 points for our trade will close successfully, and for actually EMA 18 we close this transaction. Actually, if you have been trading and knowing this trading strategy, you have already have one position closed successfully and 4 more tips to close your another position also successful. So this is how it works. Okay, this is it. Our time is coming to an end, and thank you very much for staying with us. And I will remind you, if you want to actually consult us and see us face to face, you can always find us in our office, or you can go to our site. You can use live support. Your question will be answered immediately. And from our parts, we promise that we will continue to bring new releases and new webinars with lots of useful information, maybe with more practicals, but I don't promise that. But with lots of information that, of course, can be used by you for your successful trading. Good luck. Thank you for staying with us. And this is CLIQ Company. Nice to see you again and appreciate your likes and comments. Have a nice day. Have good profits, high profits. Bye bye.